Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Tuesday, the 26th of July. You know, just when you thought it couldn't get any more bizarre, it gets more bizarre. The markets are now totally perplexed at the direction Washington has taken, or should I say lack of direction. You know, I'm not sure if you watched the presidential address last night and the Republican rebuttal, but talk about two houses divided. You know, it's painfully evident that each man was just playing to their political basis. Pure Kabuki theater. You know, I always enjoy a good comedy, but this DC comedy has gone beyond a joke and is no laughing matter. The joke is turning into a tragedy, not just for the American economy, but also for the American mystique overseas. How these two parties can honestly look themselves in the mirror and say they're doing the right thing for the country is beyond anyone's belief. You know, one of my technology heroes is Steve Jobs, the leader of Apple. Steve coined the phrase reality distortion field, RDF. It was Steve's ability to convince himself and others to believe almost anything with a mix of superficial charm, charisma, bravado, marketing moxie, appeasement, and persistence. Unfortunately, neither the President nor the Speaker of the House, John Boehner, could pull off a reality distortion field last night. Too bad for both of them and too bad for the country. Okay, so without further ado, let's get off this rant and go right to the markets because eventually they will point us in the right direction. So we're looking at the S&P 500, and you can see we have a plus 100 on our trade triangle score, meaning the trend is up. We've had the move, this is Friday's close, very tight close, the move down. We're sort of come back from a lower level today, still not decisive either way. This gets back to the reality of the distortion field. It's no trend. The PSR is right here, currently trading at 1346.10. I'm not sure we're going to get there today, but I would not be surprised if anything happened today. But generally speaking, the market, if we look at a little further out, as you can see, let's move this down, this market is sort of moving in a direction. It could be making a large top. It would need to go over really the 1370 level to really get this thing rolling on the upside. I'm not sure that's going to happen. So let's take a look at our next market, which is going to be silver. And quite easily, we just click here and you can see the silver market. Let's get a closer look on that. And you can see this market, again, this is plus 100, but you're also seeing, and I'll put my telestrator on here, we've talked about this before, is this is what we consider to be a very large energy field right here. We've talked about this almost in everything. So we've broken out certainly over this level here, and the market is just sort of hanging around, getting used to this new level. I think we're going to see the market go higher, and I think we're looking at the 43 level as an intermediate target zone for this market, but again, a lot's going to depend on what comes out of Washington and how the markets react. But generally speaking, if you're going to place your position, you're better off being long than being short and trying to pick a top here. Trade triangles are all positive, the monthly, the weekly, the daily, plus 100, meaning it's in very strong hands, and I expect this market is going to continue to move higher. So let's clear the screen off again and go to our next market, which is going to be gold. Gold is very interesting what's happening in that market, so let me share that with you. And this is gold spot. Now we track the spot markets both in silver and gold, and the reason we do that is simply because there are no carrying charges, insurance charges like you'd find in the futures market. So this is definitely the cleaner, more positive way to track the market. So getting back to what we're looking at is the chart is definitely what we consider to be positive. All of our trade triangles, you can see quite clearly, are plus, plus, plus. Long term from 1430, the market is currently trading about $200 higher. Intermediate term from 1557, it's about $60 higher. And again, the market has moved out of what we consider to be this very large energy field. And you can see if we just draw a simple line across here, this is where support should come in, where it did. And I think right now we're just sort of getting used to this being north of 1610, and I think we're going to see this market continue to move higher. So let's see how that tracks out, but generally speaking, the trend is clearly up. The way to trade in the markets is to trade with the trend, and the trend is your friend, and in this case, it certainly is your friend. So let's clear the screen off, go to our next market, lots of interesting stuff going on right now in so many ways that I want to share with you. So let's go to our next market, and that's going to be crude oil. Now, we've talked about crude oil. Again, a similar pattern in terms of the energy fields. We still think this is going to prove to be an energy field going back to early part of May. And as we sort of just draw this in very simply, we are sort of coming up. We want to see a close over 100. We're currently trading 100.25 on the September contract. We do have a mixed picture, meaning the monthly is down. Actually, the daily has turned up, so we consider that a plus, and the weekly certainly is a plus. So we are plus 70. It looks like we're starting to develop a trend. I would say if we close over 100, you should be long, and you should be buying any kind of pullbacks in this market. Again, it looks to me like today would be a good day to get long if and when we close over 100. As we've been saying this many, many times, but again, this market has not gone down. It has stayed the course. Basically, we're trading back pretty much where we were here back in May. So regardless, it would look as though all the news that's come out, the market hasn't really moved, but it looks like it's beginning to move now. Certainly it's above the PSR. The weekly is positive, and we're up the upper edges of the Donchian channel. But let's take a look at the Williams percent R indicator and just see where we stand in that market. So again, let me clear off the illustrator and go back to our chart, and let's scope this down. So we are a little bit overbought, which means we may see a pullback from these levels, which is not unusual. If you look at this pattern here, we sort of, every time we've reached up here, we've sort of seen a pullback, so we may see a pullback. But generally speaking, we had a earlier pullback in the day, trading below 98. We've come back almost over $2, and it's actually acting very, very well. So let's see if this market again closes. I would say a close over 100.50 would be, I would consider that to be very bullish. And I think it'll start us on a journey to see higher levels in crude oil, which translates into higher gas prices for everyone, I'm sorry to say. But again, that almost fits into our scenario of inflation going to come into this market in a pretty big way, which means prices of oil and other commodities are going higher. So let's go back to our next market, and that's going to be the dollar index, which basically took it on the chin today. We actually broke through the 74 level, which was right here, and it's towards the lower end of the range. Yes, it's oversold, but the other thing I was going to suggest to you is this further back. If you look at this area, and that's right here. This is the lows that we'd seen on June, I believe it's June 7th, and that's certainly, well, I can give you the exact price. That was June 7th, and the price was $73.50. So that's a key level with $73.58 right now. And as I say, we'll just draw that simply on the screen, so I'll give you a visual. But we just want to project this across here. This certainly is a very important level of support. Should we break through there, then I think we'll see obviously further downside action. But that's definitely a key level to watch, in my opinion. So let's clear the screen again. Let's go to our next market. And this is the one I think is going to be very, very interesting, and the one I want to share with you. So let me just go clear the screen and get to our next market, and that's the actually, let me give the full title, the Reuters-Jeffries CRB Index. As you can see, we've been talking about this. The pattern is very similar to the crude oil, and again, we've got what we consider to be a large energy field right here. And look at how the parabolic is just tracking up like this and just missing today's action, because we were under pressure early with crude oil. Crude oil is a very major component of this index, but again, we want to see probably a close up here somewhere, clear this highs, get it off, and then I think once we get here, we'll start to see this market take off on the upside. It just seems like politically they always make the same mistakes. They did this back in various Republican and Democrat administrations, but it looks to me like they're trying to stifle inflation, and it's not possible to do. So I think you want to be very aware of this indicator. This is going to be this is the Bernanke indicator. that he hates to look at. He doesn't look at it. That's the reality. He doesn't look at it. So anyway, that's something to watch very carefully. I would say a close over the 350 level would be a start. 352, 353 clears the market to go higher. I think watch this market very, very carefully. It's a big one. So, hey, let me clear this off the screen. So there's something else I want to share with you, which I'm very excited about, and that is our show, our Wednesday show. We do a show every Wednesday. We've had a lot of feedback, a lot of phone calls coming in, but I just want to thank you all for your feedback for our Market Club TV show on Wednesdays. We certainly appreciate it, so don't stop those calls coming in. But I'd like to invite you to be part of the next show by calling 410-867-2100, extension 129. It's on the screen right there, 410-867-2100, extension 129. Give us your feedback. Tell us how you use Market Club. Ask a question about the markets, or ask us how to use a particular technical indicator. Or, better yet, tell us how we can make the show better. Hey, just by calling today, I will enter your name into a drawing to win a 1-year membership to Market Club. Even if you're already a member, I'll extend that 1-year membership. The winner will be announced on this week's show. So don't miss it. So call today. So be sure to watch the show Wednesdays, 5 p.m. live. Don't miss it. As always, we rely on our market-proven trade triangle technology for catching the big moves. Hey, this is Adam Hewson. Thanks for stopping by. See you tomorrow at 1 o'clock and also at 5 o'clock for the show.